Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about weighting your cryptocurrency portfolio, lessons from the last market cycle. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. That's going to end in 2 days, so make sure you check it out. We do have several different tiers, including a free one. So again, link is in the description below. Sales ending in 2 days. Now, if you are a person who's followed this channel for a long time, the title of this video might actually be somewhat familiar, but I imagine it won't be very familiar to too many people. We actually did various videos on this exact topic back in 2019. So if we were to take a stroll down memory lane, we would see that I put out a video back in 2019. It was called Weighting Your Cryptocurrency Portfolio, Lessons from the Last Market Cycle. And in that video, we went through various exercises where we looked at if you had put $1,000 into the top 10 cryptocurrencies on November 15th, 2015, and let it sit throughout the entire cycle, through the bull market and the bear market, at least at that point, how would they have performed based on various weighting strategies? So you can see in this video, we weighted it by market cap, the square root of market cap, an equal allocation, just basically putting in $100 into every single cryptocurrency in the top 10. And then also you'll notice this one had this really weird exponent, 0.099649. And the reason why that came up is simply because I actually optimized it, right? So I calculated out if you were to raise it to a certain power, what portfolio would have actually maximized your return during that bull market. And that's what it ended up being. But it wasn't really that dissimilar from some of the other strategies, and so it's not necessarily that important to go through that much effort. But I thought this was a useful video back then, and I thought it got some relatively decent feedback. So I thought, why don't we do the same thing again, right? Do the same thing again and kind of see how things actually would have performed based on various weighting strategies. Okay, so back then, what you'll notice, and this was right before the bull market began, the portfolio that really, except for, optimizing it, and that only works when you do it later, raising it or taking the square root, right? So taking the square root of market cap or raising it to the 1/2 power actually gave you fairly decent returns even throughout the bear market, right? So, I mean, at the peak, your $1,000 would have been worth $237,944. This was, a couple cycles ago. And then through the bear market, it would have come all the way back down to 39,400. If you had optimized it based on this, which of course you don't know ahead of time, or you just put an equal amount in, it would have gone up slightly more. But of course, in the bear market, it would have essentially come back down to a fairly similar level. So I thought it might be interesting to repeat this same process, but for the coins in the last market cycle and not the one from 2015. So what we're gonna do is I just want to spend some time explaining this. We're gonna pick December 16th, 2018, so right around that market cycle bottom, and all we're gonna do is pick the top 10 at the time. Okay, that was Bitcoin, XRP, ETH, XLM, EOS, Litecoin, Bitcoin Cash, BSV, Tron, and ADA. Okay, now what do you notice about some of these coins? Some of them went to new all-time highs this last cycle, some of them did not, right? Some of them had like echo bounces where they went up a little bit, but they didn't really do that much, right? They maybe put in a double top or a macro higher low from where they were in 2017, but some of them did put in new all-time highs, right? Including Bitcoin and Ethereum. Cardano also put in a new all-time high, and so on and so forth. So some of them did, some of them didn't. Putting them into all of these, though, you don't really know which ones are going to put in new all-time highs. Of course, Bitcoin and Ethereum, as I've said many times, I would argue are in fact the blue chips. Now, and by the way, if you look at this, there's probably some people here that might not even recognize all of these, right? And one of the reasons is because they're like an artifact of a prior cycle. If you look at the video I did in 2019, you might not recognize half of these, right? Like MadeSafe coin, BTS, Next, right? I mean, like a lot of these coins are just relics of a prior cycle, and people today won't even necessarily recognize them anymore, right? So if you were to weight $1,000 into a portfolio at the cycle bottom, right, which is easy to cherry pick now, of course, but in December of 2018, and you would just put $1,000 into the top 10 coins and you weighted it by market cap, that would have been 64.9% into Bitcoin, 13.57% into XRP, 10.19% into Ethereum, and so on and so forth. And then you get into really small allocations for some of these altcoins. Now, had you done that, your portfolio, your $1,000 portfolio, would have turned in to about 3,000 to 4,000 in 2019, would have come back down and put at a macro higher low in March of 2020, and then would have blasted off to around 18 to 19K by May of 2021, and then would have gone even higher to about 21 to 22K in November of 2021. So a $1,000 investment back then would have yielded about a 21x return had you bought, of course, at the market cycle bottom and you weighted it by market cap. Now that might seem somewhat interesting. So it would have gone up about 21x despite the fact that about 65% of your portfolio would have been in Bitcoin, right? So it's something to consider. Now, you might say, well, what's the point of weighting it any other way, right? Like, weighting by market cap is something that people often do. Even in traditional finance, in traditional markets, looking at market cap weights tends to be a favorite way to weight portfolio allocations. But for some people, they might want to take on more risk. And it's not up to you or me to determine if other people should take on various amounts of risk. Of course, it's up to each individual person to figure out what risk are they willing to take on. And so if you think about what does the square root of market cap do? Well, if you take the square root of market cap, it's going to basically diminish the amount you're going to be putting towards the higher market cap coins. Like if you take the square root, so let's think about two numbers. So 4 and 9. Obviously 9 is more than 2x 4. But if you take the square root of 4, you get 2, and you take the square root of 9, you get 3, and 3 is only, 50% higher than 2, right? It's like 1.5x, not close to 2. Okay, so by square rooting the market cap, it's going to basically have you put more into some of the lower market cap coins, not total more, right? You're still putting 33 to 34% into Bitcoin in that case back in 2018, but the difference is rather than only putting, say, 1% into ADA, you would have been putting about 4.3% into ADA, if that makes sense, right? And instead of putting 10% into ETH, it would have been about 13.5% into Ethereum. Now, had you bought in 2018 and you weighted it by the square root of market cap, how would it have performed? And by the way, it would have gone up, by weighting it by market cap from the market cycle bottom would have yielded about a 21x return. Today, despite the bear market, you're still up 5 to 6x had you not sold a thing, right? So this is one of those things where just simply time in the cryptoverse tends to help people out, even if they diamond hand the entire bull market. If you take the square root of market cap, what's interesting is, you might have put more into some of these lower projects. So you might think, well, wouldn't that have performed exceptionally better? The answer is actually, in this case, it wouldn't have. And you might say, well, why not? It seems like it should have. I mean, we know the Ethereum outperformed Bitcoin. We know that Cardano, in the bull market at least, outperformed Bitcoin. I mean, from the bottom for ADA, it started at like 2 cents and then went to $3. So it went up 150x basically from the bottom to the top, whereas Bitcoin, did not go up nearly that much. So then how does this portfolio not generate a lot more return? How is that possible? Even though you put, 4 times the amount of ADA in than you would have with the market cap by weighting it by market cap. Well, of course, the answer is somewhat simple. And it's because you only know the altcoins that are going to do that after the cycle is over, right? There's some coins in here that didn't do anything in the last bull market, right? Or didn't come anywhere close to new all-time highs and just sort of continue to slowly dwindle into irrelevance, right? And so while you may have put more into a project like ADA, you would have also put more into other projects that didn't really go anywhere. So think about it like this. If you put $100 into 10 different cryptocurrencies and 9 of them go to 0 and 1 goes up 10x, you're still back to where you started, right? So like 1 went up 10x, so you still have that $100 would have turned into $1,000, but the other $900, if they had gone to 0, you still really haven't gone anywhere. So you have to be really careful when you invest in crypto. And one of the things I've suggested before, of course, it's not financial advice, is the best place to start is Bitcoin and Ethereum. Those are the blue chips. And only after having allocations in those should you, I think, strongly consider other projects, because you simply just don't know which ones will put in new all-time highs. Now, fortunately, I only really got allocations in a few projects last bull market, and ADA was one of the ones that I was quite bullish on. So I guess I got somewhat lucky there. But you have to remember that there are a lot of altcoins that will not see new all-time highs. Okay, so, and had you done all this, even though the portfolio would have slightly outperformed at the top by having a little bit less in Bitcoin, now your portfolio that had more in Bitcoin would actually be outperforming. And you might say, well, that seems kind of weird. Altcoins are popping off today, right? They've gone up a lot. A lot of them are still down, 80, 90% against their US dollar pairs. A lot of them have dropped against Bitcoin over the last year as well. And so that's why you see that play out. Now, if you were to go the natural log of market cap, which basically gets you close to an equal valuation or an equal allocation in these projects, you can see it really wouldn't have increased your upside, but it would have made the downside a bit worse in the bear market. And then an equal allocation, of course, is also going to give you somewhat something similar. So what this shows is that as measured from the market cycle bottom, weighting it by market cap and the square root of market cap wasn't really a bad way to go, right? And you wouldn't have had as much in some of these lower altcoin plays. You probably would have slept better at night, because had you put a lot of money into all these different projects, some of them just wouldn't have done anything, and then the ones that did, had you diluted yourself so much because you put them into so many different coins, perhaps it would have gone up as much as you think. My general thinking is that it's best to just have the blue chips, of course, and just a small basket of altcoins, but not to get like a huge basket of them, because it's just not worth it, right? So basically the idea is, if you think the market cycle bottom is in, or whenever you think the market cycle bottom is in, maybe this is a useful tool to use to help navigate the cryptoverse. Now, something else we can do is think about what would have happened instead of measuring it from the market cycle bottom of December of 2018. What if we measured it from April of 2020? So basically right after that secondary capitulation, which sort of formed a macro higher low about a little over maybe like 15 months later. And if you had done that, you would have actually come with some different cryptocurrencies, because the top 10 in 2018 was not the top 10 in 2020, right? You can see there's some slight differences. XRP was second in 2018, but in 2020, Ethereum was in fact second. So had you waited until 2020 to get these allocations, or to take on this strategy, let's see how it would have performed. Now, of course, the upside wouldn't have been as high because you wouldn't have got it from the cycle bottom, but the strategies do result in slightly different outcomes. Okay, so it's not so obvious, and I think I have an explanation for it. If you weight it by market cap, the upside here was about 10 to 11x. Okay, maybe no, 11 to 12x. Today, it still would have been up about 3x had you bought in April of 2020, and if you had not sold a single thing, right? So it still would be doing somewhat okay as measured back then if you had just, again, diamond hands the entire bull market. But what's interesting is if you weight it by the square root of market cap, the outperformance to the upside is a little bit more noticeable, right? Like you can see clearly that this peak does go, maybe 20% higher or so. And even now, it's still outperforming so far. It doesn't mean it's going to continue forever, but at least right now it is. And why is that? Why was that why do we see a distinction there, right? Like if you measure from 2018, market cap, weighting by market cap did better. If you measure from 2020, weighting by the square root of market cap actually did better. And there's probably not a right or wrong answer, honestly, but my interpretation of perhaps why is because a lot of altcoins can still bleed even after the bear market's over, right? So like even in 2018, when Bitcoin had bottomed, there were still a lot of altcoins that continued to lose value against their Bitcoin pairs. I mean, even Cardano, which is one that I had in the last cycle, it still put in a new low in 2020, right? It went lower than where it was in December of 2018. So one thing to consider is that by waiting an extra 15 months, it allowed for some more of like the dead projects to slowly fade into irrelevance. and the cream of the crop to rise a bit more throughout the bear market, right? So like obviously back then I was more bullish on Ethereum than XRP, but XRP was higher market cap in December 2018 than Ethereum. But by 2020, Ethereum had taken that number 2 spot. And so by waiting until 2020 to carry out this same strategy, weighting it by the square root of market cap would have actually given you better returns because it would have allowed you to put more into Ethereum than had you done it in 2018 and weighted it by the square root of market cap. So one thing about this year, we've talked about this many times, you have your bear market year where basically the market just goes down and it's essentially down only and cash is king. And then you have the year after the bear market year where you mostly go sideways with deviations to the upside and the downside. Okay, so what does that mean? Because everyone always asks, what's going to happen in 2023? My general expectation is that it's mostly going to be remembered as sideways, but I think we will have deviations to the upside and the downside. In 2015 and 2019, Bitcoin went below its yearly open, okay, for at least a few months, right? At least a couple months. 2015, it was below its yearly open for like 2/3 of the year. So far, we haven't gone below the yearly open this year. So there's still a risk that we will go below the yearly open at some point. But I would argue that this year is mostly going to be sort of watching the better projects claim relatively higher market caps compared to the more useless projects. And of course, the overall market risk will depend on some of the cyclical behavior of Bitcoin, but also potentially whether we go into a recession or not. So to some degree, weighting it by market cap around the cycle bottom or whenever you think the market cycle bottom is tends to be a fairly good strategy because you still have a ways of some of these bad projects that still need to die off before the next bull market can start. But if you were to wait until, say, 2024 to perform a similar strategy, then weighting it by the square root of market cap would have actually been better based on what history shows us, right? So let me say that one more time, and hopefully I can do a good job of explaining it. So coming in at the market cycle bottom in 2018, the results show that weighting by market cap and just simply putting more into Bitcoin early on into that new cycle would have been better. But if you had waited if you had just not put any money into the market in 2018 or in 2019, and you just simply waited until a couple months before the halving, you would have been better off going a little bit more into the altcoin market, just simply because a lot of the projects already died off and the ones that were still remaining were sort of ready to go, right? If you weight it by the natural log of market cap, you see something similar to the square root, and an equal allocation is also somewhat similar. Okay, so hopefully this is useful. I thought that just simply going through various weighting strategies, various portfolios, from measured from 2018, 2020. If you go look at 2015, which is going to be somewhat similar to what we had in that video, you can see, right, like the same coins, and you calculate it out from 2015. Might be interesting to see what it looks like because it's going to bring it through all the way today. And what's interesting is $1,000 back then in 2015 weighted by market cap. So if you had weighted it by market cap, $1,000 back then, today we were at that 70K. But that's like, this is 2015 to 20, it's 8 years basically. So again, this is one of those things where, it shows really that the bear markets come and go, but if you just stick around for the long haul, you're probably going to do pretty well, even if the bear markets can be very challenging, right? And if you weighted it by the square root of market cap, you can see it would have actually even been better, right? Had you done that. The natural log, even better, and then an equal allocation about the same, right? So maybe just look at market cap, square root of market cap, and equal allocation into the top 10 back then. And that's what it looks like. And you can see that an equal allocation back then, or even a market weighted by market cap back then, would have been 92.4% Bitcoin. You would have only put in 1.31% into ETH. But the thing is Ethereum back then was like $1. So even a 1% allocation still would have been quite useful if you're talking about 8 years later. Hopefully this tool has been useful. Again, make sure you check out Into the Cryptoverse Premium at intothecryptoverse.com. You'll get access to this tool and you can play around with it, look at various cryptocurrencies and various dates. Again, links in the description below. Sale will end on Wednesday. Thank you guys for tuning in. Make sure you subscribe if you're not subscribed. Give the video a thumbs up, and I'll see you guys next time. Bye.